glad you're with us. This is the Retirement Education Hour. I'm here with Kirk Cassidy and Dr. Paul Metler for another fantastic edition of our program. Here on the show, we talk about what it takes to retire successfully. And the theme throughout each and every program is that it takes a lot. It takes a lot of education. And that's why we're so glad to have the Retirement Education Foundation sponsoring this program. They're also holding educational events. These are courses, deep dive courses, almost like master's level classes on retirement planning. Throughout our show, we'll tell you how you can attend. And boy, do we want you there because we believe you deserve a great retirement. You've worked so hard, and now you need the know-how to get you to and through retirement. And we're going to go into a great topic today, and that is, who are you getting your advice from when it comes to retirement planning? Not all advisors are created equal, and you've got to choose the right one for your situation and your stage in life. So we're going to be doing that with Kirk and Paul today. A few little housekeeping items. Want to make sure you know that this very program and so many others are located in our library. You can download them as a podcast. Find them wherever you find your favorite podcast. Simply search for the name of the program, Retirement Education Hour. And as we dive into this today, Kirk, Paul, want to make sure that our listeners have the website. I mentioned those master's level like courses on retirement planning. You can find out more at retirementplanningedu.org. Kirk, Paul, as we begin to choose an advisor, and many of us already have, right, in the accumulation phase as we're trying to build our nest egg, what do we need to keep in mind about our advisor as we get closer to retirement?
You know, Megan, as I was listening you sort of tee up the show today, and I was reading through the content that Paul put together for the show today, I couldn't help to think about the number of people that are on radio and TV in the financial service industry trying to distinguish themselves as retirement experts, right? So everyone's sort of saying, they're saying the same things. And I got to think the listeners get sick of this, the difference between the accumulation phase and the distribution phase. And it's real, folks. It's real. No one's misguiding you when they talk about those two phases. Here's the challenge. It is so much more complex than just the two different phases of your life in terms of saving versus spending. They are two different phases. But choosing the right advisors and teams to help you isn't just enough to say, hey, I am retirement focused. There is so much nuance here. It's one of the core principles of our, what is like an 8-hour master level course that our charity had developed over a decade ago. Now remember, we're a charity. Our goal is to educate you and provide you with the advanced information about retirement so you choose the right teams, so you spend more, retire with less anxiety, retire earlier, and giving you the tools, not to be able to do this yourself, but most importantly, what this show is about is how do you find the right teams that actually are really implementing the strategies to produce these outcomes. And unfortunately, we've taught over 10,000 people, Paul. Over 10,000 people has been through the charities courses. And what we find is most people in our industry they talk the game, but they're not actually implementing the necessary things that people need. So that's the purpose of the class, Paul, right? I mean, that's the purpose at the core.
It is. You know, it makes me think, you know, as you know, I had a root canal this week, right?
Yes.
And there's a reason why I went to an endodontist. I didn't go to my general dentist, right? There was a reason, because I wanted somebody who actually specializes in this procedure because I want it done right. It's no different than this, right? Everybody says they do retirement planning. Most people focus on accumulation. You want someone who really is a specialist in retirement planning, and we're going to help you figure out how to distinguish the two.
That's awesome, Paul. Actually, I want to make sure we go back to that because not everyone goes to a specialist for the root canal. They don't. And so we're going to distinguish why most of our listeners should be, but why the average person may not be. But again, at the core, our charity teaches these 8-hour courses. They're taught at major universities and the colleges in your areas. If you'd like to learn more about the courses and register, go to retirementplanningedu.org. That's retirementplanningedu.org.
You know, people, I don't think, you know, Kirk, people appreciate, and it's not their fault because you've never, if you haven't retired, you've never done it before, why it's so important to find a specialist who only focuses on retirement planning, as we talked about in terms of even getting a root canal, right? There's so many different levelers that people have to pull in retirement planning versus when you are working and accumulating your wealth. And people don't understand all the different levers out there that you have to pull, and you need to understand how to do them in together in harmony. And it's if you've not done this before, you don't fully appreciate it.
Paul, that's so sincerely. This is why, particularly those people, $700 to $20 million. Now, yes, even you $10 to $20 million folks, you don't have the right teams. I'm telling you, it's like the data is staggering. 98 out of 100 people do not have the right teams, and they think they do, but they don't have the right teams. And what this class will help you to identify is, A, you don't have the right team to give you what you should have. And we'll talk about the things you should be getting in retirement. So you're not getting those things. You should be getting those things. And that's what the class is going to help you, is to know how to go find those right teams. We're going to teach you how to do background checks, what the different disclosures means, and then what specific things in a plan, and even in messaging, that when they're talking and showing and illustrating to you through this master's level 8-hour course, it's going to help you to know whether these people, these teams, these advisors are really implementing these strategies. And our guess, for most of you, not our guess, we know, we've taught 10,000 of you. We know this, right? We've got, I don't even know I know the numbers are hundreds of thousands that are consuming our content around the country. We know consistently that advisors, they're incentivized to get you to spend less. The less you spend, the more they make. The longer you work, the more they make. Because the more they manage of your money, the more money they make. Also, the less work they do for you, the more money they make. So we're going to teach you the work that needs to be done in retirement. That work didn't need to be done when you were accumulating your wealth. It was a lot easier then. So stick around for the show, and if you'd like to attend one of our 8-hour master level courses, we teach them over 2 evenings or 1 full Saturday at major universities and colleges in your area. If you'd like to register, all you have to do is make a $29 donation to charity. Go to retirementplanningedu.org. That's retirementplanningedu.org. Thanks for listening to the Retirement Education Hour. Be sure to follow or subscribe when listening on Spotify, Apple Podcasts, or wherever you listen to your podcasts. And now, back to the show.
A great show that really applies to all of us. We know we need help as we plan for retirement. We know we need help as we're trying to save for retirement, but we've got to have the right advice. What's at risk if you don't have the right advice as you move into retirement? Well, Kirk and Paul, you say you could end up working longer and spending less, which means spending less on your dreams in retirement. Tell us how our mindset has to shift as we move closer to that retirement line.
Well, here's the deal. Again, as a charity, the goal of our 8-hour courses that we teach and in the white papers and the webinars that the charity produces on our website, it's really about providing the education to help you to find the right teams to help you, right? It's to help you to have the knowledge to be able to find and identify who is really providing me the best possible outcomes in retirement. And I don't think you listeners have especially you $1 to $20 million families, have a true appreciation on how much less income you will all spend than you could be spending, and how much longer you will retire. Look, I just ask you to go read articles about retirement, and go ahead, Google them. All the major publications, the Susie Orman, the Dave Ramseys, they're all saying the same thing. They're all trying to convince you to work longer and spend less. Only take 3 or 4% withdrawals out of your investments in retirement. They're all consistently with the same mantra, same messaging. You should work longer. And that mantra is getting stronger and louder over the last couple of years. And let me tell you why. There's 2 reasons. One is because people are in our industry try to be generalist. That's one of the reasons. Generally speaking, they want to be, I take care of all people. Sure, I specialize in retirement, but I also specialize in helping people accumulate your wealth. You need to appreciate accumulating and investing your money when you're younger is really quite simple from a strategic perspective. It's difficult from a discipline perspective, but from a strategic perspective, it's really simple. You need to save a lot more than most people do. You need to save a lot. And from an investment perspective, all you need to do is buy an index. That's it. Just buy an index fund. And if you had done that, you won. Now, what our industry will try to convince you when you're accumulating your wealth is that they invest better than you invest. They've got an algorithm, a portfolio, a secret sauce. They have research and data and information that can produce better outcomes than you can. Well, I generally would say they're right. They can produce better outcomes than you if you are trying to do what they're doing, market timing and stock picking. But if you just buy the index, nobody in the entire industry has beaten the index. So it's simple when you're younger. Save as much as you can. Now, here's where it gets a little tricky. Save to the right places, whether it's a Roth 401k when you're younger, transitioning into a pre-tax 401k, and then just invest in the index. Simple. But in distribution, Paul, this is where everything changes. There are so many levers to manage because now we're withdrawing money out of our accounts, right? And if we want to withdraw more than our 3 or 4%, it requires a lot more individualized plans, customized plans, which for the financial advisors, that's not scalable. That's not profitable. And remember, always remember, folks, hear it in your sleep, me saying this. The less you spend, the more your advisors make. The less you spend, the more they make because they're managing more of your money. The longer you work, the more they make because they're managing more of your money. And them just telling you to live on 3 or 4% doesn't require them to build an individualized custom plan for you. They just use a software system like eMoney or Money Guide Pro to give you a cookie cutter plan that has you take your 4% withdrawal rates. You should be, if you come to the class, that's what we're going to teach you. If you come to the class, we're going to teach you how to take 6, 7, 8, sometimes 9% withdrawal rates. More importantly, we're going to show you that you can take it. And then we're going to teach you how to find the right advisors and teams to do that. We're a charity. That we have no skin in this game other than give you the information and push you to the right teams and advisors to help you. Paul, how'd I do?
You did great. You did great. And if I can just summarize, I think basically what you're saying is there's a disincentive for most advisors to have you spend more. The disincentive is not only do they make more money when you spend less, but they also have to work harder. And they would rather shift the responsibility to you. You do the work. You just spend less. And because you spend less, they don't have to put in all the hours to try to figure out how to get you to spend more. That takes time. That takes energy. That takes work. And there's no incentive for most of these advisors to do it for you because all of you are fine with what you're getting. So I think what you're saying, Kirk, is there's a disincentive. Come to the class. You're going to see what if you find the right advisor, you're going to see what actually is available to you. And at the end of the day, you're going to see that you could spend way more than you thought you can and what your advisors are telling you. And most likely, if you haven't retired, you can most likely retire sooner than you thought.
I'd be willing to bet every single person, the 10,000 people we've taught now over the last decade, most everyone has retired earlier unless there's other incentives keeping them working. But if it's purely financial, they've retired earlier because we've helped them to find the right team so that they can do that. See, we'll dive deep as we move into these segments into some of the specific levers to sort of give you a sense of what we teach in the class, but also what you should be looking for and hearing your advisors doing. And then they should be able to illustrate how they're executing these plans so you can take that 7, 8% withdrawal rates instead of the 3 or 4% withdrawal rates. Here's the other thing, Paul, and call it a grand conspiracy. I don't care what you call it. I find it incredibly manipulative. The financial service industry knows, generally speaking, by nature, as we cognitively decline, in other words, as we age, We've all learned a lot about cognitive decline associated with the elections, right? We all kind of have an idea and sense. As people age, they become more fearful, particularly when it comes to money. That's a fact. And they leverage that fear to get you to spend less, right? And the whole theory is every time we have a short-term market event, you need to change your spending patterns and back down. That's crazy. You don't need to do it. You shouldn't do that if you have the right teams helping you. That won't be an issue. Come to this 8-hour course taught at major universities and colleges around your area. We also stream them live from the university, so wherever you're at in the country, you can participate. If you'd like to register, go to retirementplanningedu.org. That's retirementplanningedu.org. Listening from outside Michigan or Missouri? We stream courses live from the university so you can attend anywhere in the country. Go to retirementplanningedu.org. That's retirementplanningedu.org to sign up. And now back to the show.
All right, as we're diving back in, I mentioned the charity, the Retirement Education Foundation. The mission there really is to help people find the right team, right? The right team that's going to help them manage their retirement to give them the best advantage around when to retire and how much they can spend to really take advantage of all that retirement has to offer. Tell us more about that approach from the charity.
Well, so I can only imagine. You caught me making notes at the same time. I apologize. So I can only imagine being a listener of radio and watching TV. There's a financial service company doing radio shows and TV shows all over the weekends on all these different channels in all these different markets. I know that our foundation, our charity, is making an impact in the financial service community. I think we were hoping when we started the charity over a decade ago that we would make an impact. We would change the behavior of the financial service industry. And unfortunately, what we have found is, we've changed behavior. They've just changed their messaging. So if you listen to all the different radio shows out there, they all sound very similar, don't they? So that's why the 8-hour course is so important, because it's going to not just the messaging that people will say when you meet with them or when you listen to them on the radio or you listen to them on TV, but the actual strategies, the literal levers that you should be able to see in your plans that these people are building for you so that you can test and make sure these people are really providing the best outcomes for you. You $700 to $20 million people, you're sort of in a gap where for many of you, you don't have enough wealth to get that family office real team approach, but everyone's talking about pretending like they're doing it. So one of the greatest examples of this is, and we track this, the number one downloaded white paper we have on the charity's website is our sequence of returns white paper. We have a sequence of return white paper and calculator. And we do some searching on who is looking that up, and we know our competitors, or I shouldn't say our competitors, our industries, the competitors in the industry are looking it up, and we are hearing them repurpose this message in that white paper many times. So they're saying it, but we're going to teach you in the class, and we'll teach you a little bit right now, what it should look like. So sequence of returns risk is managing where you're taking your income from during market volatility. So when the market goes down, you cannot withdraw money out of a portfolio if your portfolio is down. So as a result, the only way you can continue to have income and not just stop taking money is you have to have pivot accounts. You have to have another account that is not exposed to market risk. Or today, I would feel comfortable with treasuries. A couple of years ago, I may not have felt comfortable with treasuries, but something non-correlated to the market that doesn't go down when the market's down that you can pivot to take the income from. So that's step one, is making sure we're not withdrawing. Because if you do the math, and go check out the calculator and white paper, when the market goes down 50%, I know it doesn't go down 50%, but I'm going to make the math easy. If it goes down 50%, you need 100% to break even. So if the market goes down 25%, and then you take out your 4 or 5% that year in withdrawals, the next year you're going to need about 43% to break even. But the next year you need income again. So you actually need about 50% growth the next year just to get back to even. You cannot do that. That's why they tell you can only take 3 or 4% withdrawal rates, because no one has mapped out pivot accounts for the multiple negative market events we're going to have. I mean, on average, the market goes down 14% a year. It comes back before the end of the year, but that's an intra-year drawdown. You're going to have 3 to 7 major market events throughout retirement. You've got to manage where you're taking your income from. And if you do that, that's what drives performance. That's what allows you to take 6, 7, 8% withdrawal rates. But you have to be able to identify, is that in your plan or not? Not just someone talking about it on the radio or talking about it in a meeting with you. But can you identify in the plan where the pivot accounts are and how they're managing the sequence of returns risk? Paul, I know I took a lot of time. Take it from here, please.
Well, no, I think what you said was right on. I mean, I think most of the listeners today understand intuitively the idea that you don't take out distributions when their accounts are down. I think most people appreciate that. I think the problem is most people don't really know what to do with it, other than maybe put money in cash, right? Most people understand that they shouldn't take money out of accounts that are down, but have no idea what are the strategies to fix the problem, to prevent this. That's what the class is about. Folks, this show is not a replacement for the class. There's only so much we can talk about in these segments. But in the class, we actually teach you the strategies to manage this risk, which is the greatest risk you'll be exposed to in retirement. So you don't just want to know it conceptually. You actually want to know how to solve it. And that's what the class does. It teaches you the strategies to prevent this risk.
It's great, Paul, because you're right. I mean, I love your point because we can't tell it all. I mean, we're giving really simple verbal descriptions, but it goes deeper. I mean, for example, you don't want to rebalance a portfolio if the market's down. You don't rebalance until the market recovers. It could be 2, 3, 4, 5 years before you're rebalancing your portfolio. You have to have pivot accounts. You guys don't know what we're talking about. I know that. I know you don't. That's why you need to come to an 8-hour course taught at University of Michigan, at Michigan State, at Oakland, at Eastern, University of Missouri, at Columbia College. We stream them across the country while we're teaching at the university live, so you can ask questions. All you have to do is make a $29 donation to charity. Register at retirementplanningedu.org. That's retirementplanningedu.org.
Classes are forming now. Go to retirementplanningedu.org to register. Again, that's retirementplanningedu.org. Use the promo code PODCAST to receive 50% off your tuition. And now, back to the show.
On the show today with Kirk and Paul, we've been talking about getting the right advice from the right advisor for your stage in life. And as you get closer to retirement, you've got to make sure you're working with the right person. Kirk and Paul, part of that is making sure the person you're working for is actually licensed, credentialed, and has the know-how required. How does someone figure that out?
I'll tell you that it doesn't make a lot of sense to me, but there's enough wiggle room around regulations that it makes it difficult for the consumer. It does. I mean, again, this is another area where I think the charity and this 8-hour course is so critically important, because I think people are being fooled every single day by credentials or lack thereof, but they don't know the right questions to ask. So this is a short segment. Paul said it last segment. There's no substitute for an 8-hour class, us doing these radio show segments. Here's what I can tell you. There are a lot of ways that people can manipulate their level of expertise. The barrier to entry to be a financial advisor today is not difficult. You can take a weekend course, sit for an exam on Tuesday, and by Wednesday, call yourself a financial advisor. Now, you may have filed bankruptcy twice in your lifetime at some point. You may have been in jail for something 10, 20 years ago. You may have failed at other careers and other businesses, but you can be a financial advisor. And then there's some wiggle room around if someone's licensed to really offer securities and advice, or are they just insurance licensed? A lot of the people you see on radio and TV primarily are focused on selling insurance. I've taught you this. Anytime you hear anyone say safe money strategies, run. These are insurance people. Predominantly what they sell is insurance. They may have some securities licensed people working at the firm to provide cover. Maybe a little bit of money goes into securities, but they're predominantly selling you insurance. See, the class is going to help you to identify all the little manipulations and games the financial service industry does, and they do a lot of them. I mean, it's about creating a perception. The other one is trying to create a perception that they're much larger of a firm than they really are. So we teach you how to read their disclosures and what it really means and where you look information up and how you do background checks. But not the basics. Like, we're going to dig deep, because here's a great example, Paul. I mean, I can tell you in our private practice, we do have a private practice. We operate a little different. It's a family office, so it's not the typical people. It's a little different situation, our private practice, where we have CPAs, attorneys, CFAs working together, dealing with higher net worth families. So we have CFPs, certified financial planners, and CFAs that end up coming to our private practice for us to build their retirement plans. I have tried to hire many CFPs in the past that could not figure out how to do real retirement planning. Because, see, some of these credentials, while it gives you a broad breadth of knowledge across a lot of different areas, it's only an inch deep. So this is what makes it difficult for a consumer. Someone can say they're a CFP and they really never do financial planning, real financial planning. They have a lot of knowledge. I mean, it's a super wide, they can talk to you about property and casualty. They can talk to you about disability insurance. They can talk to you about a lot of different things, but their knowledge base is like an inch deep because that's all they can afford to go. So these credentials can be tricky. That's the purpose of the class, is to help you weed through, to ask the right questions, to identify the tricks that our industry uses, to stay away from problems so that you can get best outcomes. Paul, I hope I hit that okay. And I got to be careful because they get mad at us. I mean, they get mad at the charity.
I know. So, as you were speaking, it made me think about somebody. There's so much talk. If I could just say, there's so much talk about this whole fiduciary thing, right? I mean, you hear it all the time. Fiduciary. Are you a fiduciary? As if all fiduciaries are created equal. This goes back to, you got to dig deep, right? Because we know not all fiduciaries even there are some bad. Wasn't Bernie Madoff a fiduciary?
He was.
He was
a sociopath, right? But he was also a fiduciary.
So, exactly. So here's the thing. It goes back to, there's only so much we could explain on the radio. There's a lot of things you need to understand when you're picking an advisor in terms of their credentials. You just can't, it's just not, you find someone that's fiduciary and you're guaranteed to have a good advisor. There's so many things you need to understand when you're picking that advisor. And again, what I love about the class is that's the last thing we do in the class, is we walk through step by step all the things that you need to know, not just if they're a fiduciary, not just what they're licensed, but who do they work for? How do they work? Who are they affiliated with? There's so many things you need to understand. It's the benefit of coming to an 8-hour course.
Yeah, it really is. I am really, honestly, 10 years into this, 10,000 people, having the experience to see all the different mistakes, manipulations, confusions that people go through has really helped us to shape. I'm really proud of our course. It's really powerful. I mean, we are so proud of our course that we make a guarantee. Everyone that attends the course, anyone that goes, if we don't significantly change your retirement, meaning you'll be able to spend more, choose the right teams, and pay less taxes and have less fear, if we don't prove that to you by the end of the course, we'll make a $1,000 donation to another charity if you want. And we've had to do that once in 10,000 people. We're very, very proud of the information we're teaching. So please attend one of our 8-hour courses. All we ask is a $29 donation to charity. That's it. If you'd like to register, go to retirementplanningedu.org. That's retirementplanningedu.org. To find our latest white papers and webinars, go to retirementplanningedu.org. That's retirementplanningedu.org. And remember to subscribe or follow wherever you listen to your podcasts. And now back to the show.
One of the reasons why it's so important to be working with the right person for retirement is because there is an enormous tax component. It's a huge risk to retirement. What's the risk to us, Kirk and Paul, if we're not working with an advisor who's looking at taxes appropriately in our retirement?
Well, I think we keep saying the same thing. Listen to the radio, listen to TV. Anyone in the financial service industry today is promoting their tax strategies and Roth conversions. And I crack up. Some of them come on and say the next 10 callers will get a free tax analysis or a free roadmap to retirement. And those people just sell insurance. And they've bought some software that's going to give them an analysis over the next several years of whether they should Roth convert. They don't know what to Roth convert. I mean, we see some of their stuff where they're literally taking IRA money, buying annuities, starting income riders to pay just the taxes on their Roth conversions. I mean, so everyone is talking about it. People are dabbling in doing Roth conversions and trying to do tax planning. One of the things we spend a core amount of time, 8-hour master's level course. We're telling you, it's like a master's level course. We're going to get in the tax code. We're going to explain how you fill brackets, don't bump brackets, how to project out a 25, 30-year retirement plan to pay the least amount of taxes. There is the net present value of the dollar today versus tax savings in the future. We show you the math. And the reason we show you the math, again, I'll say this again, it's not so that you could go do it yourself, because I'm telling you, you're not going to do this yourself. You 10 million, 20 million, your CFOs for Fortune 500 companies that often come to our courses who think they're going to, CPAs that come to our courses all the time that think they're going to do this themselves. As they're aging and cognitively declining, they can't do this. This real retirement planning that's going to allow you to take 6, 7, 8% withdrawal rates without any chance of outliving your income as you're aging and fear is increasing, and then truly to minimize your taxes. I can't tell you how many CPAs that come to our class and say, oh my gosh, I cannot believe that there are people out there that can do this future planning, because it's not just taxes. Then you got to incorporate Social Security. See, Social Security is another great one, Paul, right? I'm jumping around a little bit, but Social Security is a tax problem. Stupid online calculators is a waste of time. None of you, the IRS tells us, Social Security Administration tells us in their own research that 95% of the people choose the wrong choice when taking Social Security because you guys aren't doing the right math. It's the same thing with pensions versus lump sums. You guys are doing the wrong math. The majority of the time, you probably should be taking the lump sum and then reinsuring and buying your own pension income because it's a tax problem, but you don't even know the tax problem. Taxes are massive. We spend hours of the class going through what real tax planning is. And again, the theme of this class is how do you find the right team to help you? That's what we're going to show you. But to be able to help you find the right team, you have to understand the concepts and what it looks like to identify, are people just saying they're doing tax planning for you, or are they really doing tax planning for you?
Yeah, tax planning is the buzz right now. But, this show is really about, how do you spend more in retirement and maybe retire earlier? And there's nothing more important in helping you accomplish that than through tax planning. And I don't want to digress. I know we don't like talking about, that's not the purpose of the show, talk about our private practice. But, it just makes me think of somebody recently who literally thought him and his wife had to work 4 more years and they were only going to get X number of dollars. And because of really, really good tax planning, are both retiring this year and getting significantly more money and leaving a lot more to legacy. And it really is 90% of that because of some significant tax strategies that were incorporated that we did. And again, I know that's separate, it's private practice, but we see it every day.
Paul, it's huge. It's much more than just Roth conversions. There's charitable giving. If you're giving to charity, there are proper ways to do this that most of you are not doing it, where you really can get the deductions. Most of you aren't even getting the deductions because you're not itemizing. There's QCDs, qualified charitable distributions. There's CRATs, CRUTs, NIM CRUTs, FLIP CRUTs. There's donor advised funds. You don't have to be worth $20+ million to utilize these strategies. We'll teach you $1 to $10 million families how to use these strategies to minimize taxes, because you can use those strategies to help you then, in addition, Roth convert, which will reduce your required minimum distributions in the future, which then reduces your taxable portion of Social Security. And if for many of you, I know you're not going to believe me, but many of you will end up in a 12% tax bracket if you do this right. With $200,000 a year of cash flow, you will still be in a 12% tax bracket, not paying taxes on dividends and capital gains. Because if you're in a 12% tax bracket, you do not pay taxes on long-term capital gains and dividends. See, you got to find the right team. See, there's no software to do this. I hope everyone hears this. There's hundreds of iterations. It's manual. There's no software that produces this. This is why very few people are doing it around the country. We want to help you find those. All we ask is a $29 donation to charity. We'll give you an 8-hour education in a university setting, or so you can stream it while we're in the university. If you'd like to retire, that's a good slip. If you'd like to attend one of our courses, go to retirementplanningedu.org. That's retirementplanningedu.org. Thanks for listening to the Retirement Education Hour. Be sure to follow or subscribe when listening on Spotify, Apple Podcasts, or wherever you listen to your podcasts. And now back to the show.
Kirk and Paul, so much of this comes back to a central theme. I mean, it's right there in the website, right? Retirementplanningedu.org. That planning, there's really no way to get around it. It is so important to success in retirement.
It is, Megan. So what we've been able to do after our charity has been teaching this course for over a decade, teaching 10,000 people. We didn't used to show. We actually, in our private practice, we're like a family office. We work with higher net worth families, and we do really individualized, comprehensive planning. So we didn't always show people who attended the course the plans that we produced, because we didn't want to create any confusion. Like, we're there as financial instructors to help you go find the right teams in your marketplaces. But here's what we learned is no matter how much information we gave people, without the illustration and us walking through what a real retirement plan looks like, people were all thinking they were finding the right teams because everyone said they had these plans. And, the plans that people typically find are the e-money, the Money Guy Pro, the right capitals, a dial of probability. All it is probability of whether I'm going to outlive my money or not, taking out, 4% withdrawal rates. There's really no, maybe budgeting. Great, budgeting. There's no real mapping income with pivot accounts, managing sequence of returns risk, mapping out taxes for summarizing it for 25, 30 years, finding the most efficient path to maximize your income so you can have that 7-8% withdrawal rates, not growth rates, but withdrawal income per year, 7-8% of your investable assets out in income with a zero chance of outliving your income, and minimizing your taxes. Also that you can retire earlier, right? So people were falling victim still to not getting the right teams to help them. And so we now show a plan. In fact, we now have a webinar on the charity's website. I think it's 30 minutes long, maybe 40 minutes long, where we walk through what a sample retirement plan should look like, what it should include, the complexity of it, the nuance. And we cover a lot of different things, not everything in that plan, but some charitable planning. There's Roth conversions. There's recognizing of capital gains. I don't think we show a sale of a business or a property or a rental property or vacation property, but we talk about all these things in the class on what a plan should have, what it should do, and then we show you what it looks like so that you can now have something to compare against when you go to find your teams. I want to leave this point, Paul. You said something earlier. Paul's going through some dental things right now. And Paul said he went to a specialist for his root canal. Now, I know that your dentist would have done your root canal, and that's what the average person would do. Just like the average retiree would go to a general advisor at Fidelity, Schwab, TD, Ameriprise, Morgan Stanley, UBS. They would go to their accumulation normal advisors that really don't specialize in retirement and just let them take care of their retirement. But that's our point. Paul went to a specialist because he wanted the best.
The best.
That's it. You all You're not the average baby boomer, listeners. Like this course is not designed for the average baby boomer who has $200,000 saved for retirement. That's what the average baby boomer has. 40% baby boomers only have Social Security. This course is designed for that $1 to $20 million family. And we're going to teach you how to find the specialist specifically for you to maximize your retirement, to give you the greatest freedom, Paul. That's what you did with your teeth. That's what you did with your root canal, because you were worried and you wanted to get the best.
You got it. I mean, I love bringing it back to that, because here's the thing. Every advisor says they do retirement planning. Every advisor says they will give you a roadmap in retirement, right? These are catchphrases that every advisor in the country will tell you to do. Just like dentists will tell you they can do root canals. But the reality is not everybody can be a specialist in everything. I don't care what profession you're in. I don't care what you do for a living. Not everybody can be a specialist in everything. But the problem is most people have no idea what a real retirement plan is, what a real roadmap is. That's the beauty of the course. If you come to the course, you'll actually see what a true roadmap is, what a true retirement plan is, and then you'll know how to find it.
Disclaimer, real quick. I've had dentists do root canals. I know dentists are great. I'm not criticizing. I don't want any dentists complaining to us. We have great Google reviews. I don't want any bad reviews.
Just an analogy.
It was just an analogy. Please, please, please. You dentist as well. And what is the specialist that does root canals?
Endodontist.
Endodontist, come on to the class, right? You guys are great for this class. Perfect for the class. And come see us in person. You could tell me I shouldn't have used that analogy. Go to the course, 8 hours, taught in university settings, over 2 evenings or 1 full Saturday. All we ask is you make a $29 donation to charity. If you'd like to register, go to retirementplanningedu.org. That's retirementplanningedu.org. See you next week.
Retirement Education Foundation is a fiscally sponsored program of United Charitable, a registered 501c3 public charity. Investing involves risk, including the potential loss of principal. Any insurance discussed in this show is backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. Retirement Education Foundation is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Retirement Education Foundation. This radio show is paid for by the Retirement Education Foundation.